Commodities are king again. Goldman Sachs out with a new report calling commodities underinvested, just as that market continues what the bank says is a super cycle. Commodities are set to continue performing well because of supply constraints caused by things like the Russian invasion of Ukraine, even as capex, or capital expenditure, is down historically. So some interesting moves here. It's clearly taking this long view. Goldman's saying that people really aren't thinking about the future right now. They're sort of looking at the present circumstances and not really thinking about investing for the long term in this space.
Yeah, commodities, the best performing asset class, or on track to be the best performing asset class. It's just a few weeks left in the year. We're talking about a return of 20%. But I'm looking through these notes, Rachelle. I mean, Goldman is calling for a return of 43%. 43%.
Huge.
In 2023. Specifically, they point to the economic growth that's set to rebound from China reopening. Of course, that's still a big question mark. It hasn't necessarily gone smoothly, although it's been just a few weeks here. But certainly that would boost demand. That would certainly help things in terms of the commodity side. And then that point that you just made, Rachelle, in terms of an underinvestment in CapEx. Goldman highlighting that specifically, that there simply hasn't been that, even as we continue to see divestments from hydrocarbons. So, you know, those two key things, I mean, nobody's going to argue with the fact that this was the best performing asset class this year. But you have to wonder, I mean, how many of those factors all line up going into 2023? Obviously, what's happening between Russia and Ukraine, still a big question mark. That has been a big reason behind the rally we've seen this year. But still, if you're talking about a 43% return, which is what Goldman is looking at, that's a pretty significant upside we're looking at next year.
And as you mentioned, a very big if when it comes to China's reopening. Every day we're hearing about new cases and what the demand might look like. This still hasn't happened yet. The policy about changing zero COVID only just kicked in. We still don't know what it's actually going to look like by this time next year, and if China has the ability to get it under control. So I think a lot of countries are sort of looking at this China reopening story, a lot of hopes there, but we still actually don't have a clear picture of what that's going to look like at this point.
Yeah, I mean, if you're talking about, 3% growth this year, and yet, as we were saying earlier this week, potential projection of 5.5%, at least that's the aim going into 2023. Certainly that would support the case for what Goldman is saying. But as you point out, still a lot of questions about how quickly things ease up and demand picks up over there.